We've been waiting, we've been waiting, we've been waiting. Euro dollar 103. Little bit of a bounce today, but think about these levels. 103.88 was the low going back to late 2016. I think it was December 20th that year. Don't ask me why I remember this stuff. Euro dollar right now, 103.86. Once you take out that low, Tom, we're going all the way back to 2003.
I actually looked at that this morning, John, and I think the last couple of days have been eventful. The number one thing I'd say, John, is there's a little bit of a haven move in stronger Swiss versus that beleaguered euro. But to me, John, and this comes off Steph Flanders' interview with the Chancellor of the Exchequer, sterling flat on its back. I'm sorry, that can't help euro.
There's a reason I put these two currencies up together, Tom, because these are the countries, the Eurozone, not a country before you start writing in, I know, the UK, two central banks that are hiking into weakness. The Bank of England's already doing that. The ECB might have to as well, and that's why we're seeing some of that currency weakness too. That meeting, Tom, next month, June, for the ECB, a big deal.
Yeah, it's a big deal, and it's a complex political deal as well. I don't even want to pontificate on it, John, until we get much closer to it. It's a huge movable feast for Christine Lagarde.
Every move lower, we see in that currency pair, though. More weakness, that becomes a bigger and bigger problem.
Inflation in the Eurozone has hit a record high 6 consecutive months, sparking further questions over how the ECB, which means European Central Bank, will react. Headline inflation in the 19-member region reached 7.5 in April, according to preliminary estimates by Europe Statistics released Friday, May 13, 2022. In March, the figures came in at 7.4%. ECB Vice President Louis Lagarde tried to reassure lawmakers over raising prices on Thursday. The Eurozone is close to reaching its peak inflation. I don't believe this. With recent news from the ongoing situation between Russia and Ukraine, I don't see inflation slowing down anytime soon. Yet they tell us it's peak. Come on, guys. Let's use common sense here. The central bank sees price pressures diminishing in the second half of this year, although energy costs are expected to keep inflation relatively high. The latest inflation reading comes in amid concerns on the ongoing war in Ukraine and its subsequent impact on Europe's energy supply, and how the concern could affect region's economy. Earlier this week, Russia's energy firm Gazprom halted gas flows to the two EU nations for not paying for the commodity in rubles. This move has sparked fears that other countries may also cut off. Analysts of a financial research firm said Gazprom were to also cut off supplies to the firm to Germany, the economic effects would be catastrophic. Market players are carefully watching out for how the ECB might react, with some projecting its first rate hike as early as this summer. In a note Friday, Bank of America said ECB will hike rates 4 times this year and another 2 times in 2023. Okay, makes me want to think a little bit more. So let's gather more information. Forward. Editor, roll clip, fair use.
It's going to be a global recession pulling down Eurozone in particular. It looks like China GDP in the second quarter could also be negative. Now, we think the United States could not go into a recession. We have still plus 1% GDP for the U.S. this year, but that's still a very significant slowdown from roughly 6 last year to 1. 1 will feel very, very weak. We had a similar situation back in 2015. There were fears of a recession in 16. You didn't get it, in part because the backbone of the United States is pretty healthy, which we still think is the case. But nonetheless, outside of the United States, indeed, you do get a recession led by the Eurozone, given what's going on with oil prices and global interest rates.
My cardboard notes. All right, here we go. I got a story out of The Hedge. I'm going to link it below. German inflation hit 60-year high, worse to come. Now, since right here, German inflation hit another post-World War II record high, piling pressure on the ECB's need to exit from crisis-era stimulus after numbers from Spain also printed hotter than expected. Now, think about that. Oh, whoa, we got to stop printing money. Are we going to do it? Nah, let's just keep doing it. It's great because then the rich people, you know, the people that are making the laws, they print the money, they give a bunch of them to themselves, they give a little bit to you, and then they go buy your stuff when you can't afford it. That's literally what happens. I cannot be more serious about that. It says right here, driven by soaring energy and food costs. And we've been talking about that in Europe. And I want you to understand in America, Europe is your barometer. When Europe collapses, I believe we have about a couple of weeks until we collapse because our economies are so tied together. And right now, Europe is a basket case. All right. I don't mean to insult anyone in Europe. I want to help everybody around the world, no matter what country you're in. Why? Because only a few, 2% of you are going to listen. And that's why when I say you, I'm not talking to my subscribers. I have the best subscribers on YouTube. You guys are amazing. You're prepared. You're not scared. You're part of the Ninja Nation. You're going to absolutely go crush it. Consumer prices in Europe's largest economy surged 8.7 year over year, far hotter than the 8.1% expected. Now think about this, guys. We keep seeing this over and over and over again. Inflation will be this much. And the next day, oh, it's actually this much. Ooh. Inflation will be this much. Oh, no, sorry, this much. Oh, they're wrong. It's weird. The guys who went to school with the funny name badge says economist. At least they could spell it. I probably couldn't even spell economist, but at least I know where we're going with inflation. Good thing my bank account doesn't care if I got a degree or not. And I want you to understand, if you don't know your economic history, you're doomed to go and be part of the future of it. And every country goes through a cycle. Economic cycle, it's just this one's really, really bad because it's the whole world, like Great Depression 2.0 kind of stuff. I don't even, and it, for the people like, that is just FUD, that is doom and gloom. I encourage you, there are some amazing videos of cats. Go and watch those. Go sit and be at peace and have your latte from Starbucks and enjoy, because it's going to get worse. Taking over right now, people's money that they make in their paychecks or in their businesses are going to much higher energy prices, food prices, all kinds of prices, all right? They can't. They're fooling you. They're lying to you right now. If you think for a second that they can raise rates, the only reason they're bluffing right now, and they may raise a few basis points, right? The only reason they're bluffing for you is to keep the collapse held back of their currency. They want you to perceive value. In the roaring 20s, everything's fine. Margin debt was all-time high. All kinds of debt levels were super high. People were running around dancing and drinking champagne because all this easy money. And while the wealthy people were buying up assets like crazy, and they're getting ready to hold them for this crash. And then those inflation hedges, you know, as everything was inflating, their money was going up. When the bottom dropped, they went out and they purchased all kinds of stuff. The same thing happened in 2008. Paper, gold, and silver contracts fell off a cliff. They didn't fall off a cliff. They trended down as the stock market was falling, and then they found a bottom right after Lehman Brothers, and then they took off a multi-year tirade. And people that own gold and silver, like myself, were able to go and buy assets, real estate. People that own gold and silver were able to sort of make a killing in real estate because their purchasing power had expanded as real estate was deflating. So theirs was inflating, their purchasing power, and real estate was going down. Those are the things we want to look for right now. I think the Eurozone is collapsing, and as long as the Eurozone holds together, I believe the US is going to hold together. But when it goes down, and we'll know it when it happens, I believe we've got 2 weeks.
Hey guys, it's Jose, your regular Joe Blow again, keeping an eye out and my ears open to all this information. So much to unpack here. It would take us 10 more videos. Bottom line, don't forget to do your own research and continue to prepare for these situations to unfold at our hands to move and prosper forward. Prepare, and prepare some more. Thank you guys. As always, stay free.